Ladies and gentlemen, dear friends of Hong Kong, it is my pleasure as chairman of the Belgium-Hong Kong Society to give the opening address for this FinTech webinar. The mission of the Belgium-Hong Kong Society is to develop closer economic, trade and cultural ties between Hong Kong and Belgium through organizing various business and cultural events in Belgium and creating an effective network in Belgium of people interested in Hong Kong. Also to promote Hong Kong as a gateway for Belgian companies to expand business in China and Asia, as well as the strategic roles of Hong Kong as an international financial and business center in Asia. It is on this last matter that today's webinar is focused. FinTech, or financial technology, is the technology and innovation that aims to compete with traditional financial methods in the delivery of financial services. It is an emerging industry that uses technology to improve activities in finance. And I look forward to an interesting discussion, and also how our younger members can, as entrepreneurs, find opportunities in this new industry. A few words specifically concerning family offices, as our friends of InvestHK are ramping up on this matter and have created the Global Family Office team. As an international financial center and wealth management center, Hong Kong offers many unique advantages for family offices to grow. And I can only urge you to contact the team of Paul Akant here in Brussels if you want to find out more of what they can do for you. A final word of gratitude to Hans de Backer for organizing this webinar and lining up a very interesting panel of speakers. So without further ado, I give the floor to our moderator of today, Jame DiBiasio. Jame, please.
Thank you, Alexander, and welcome everyone to today's seminar. Pleasure to be here. My name is Jame DiBiasio. I'm based in Hong Kong. I've been here for over 24 years, so I'm permanent resident, and I am founder and editor of DigFin, which is a media dedicated to digital finance, fintech, and digital assets. With me today, we're going to hear from experts from government, from consulting, from associations, and from startups, all talking about why Hong Kong, why be here, what is the, what's the great story of being here. I just on a personal note, when I was a much younger person, I had a stint living in Belgium. So to all of our friends joining us from there, it's a pleasure to connect with the country in a new way. And just one quick point on Alexander's comments about obviously a lot of the disruption or the change and innovation that's happening in financial services is being geared toward helping people that are younger. In many cases, startups are being founded by younger people, a new generation that is sort of taking the reins and reshaping the industry. But Hong Kong is a B2B center in particular. So this is also a place where people of my age bring a lot of experience from financial services into the fintech sector. And so we have a great mix of people across the age groups and the generations all doing things here in Hong Kong. Let me introduce our panelists today. And just right before I get into that, I just want to say to the audience, we certainly welcome your questions. So we will have a period where we hear from the various panelists and we'll do a little bit of Q&A with them, but please put your questions in the chat down below at the bottom frame of your Zoom screen, and we will be sure to prioritize those. So just to let you know. Now, let me introduce the people that you're going to hear from today. In order which we'll hear from them. First is King Leung. King Leung is head of FinTech for InvestHK. This is an agency of the government here in Hong Kong, and he is the FinTech Supremo who knows everything about the ecosystem here, and his job is to help startups get plugged into the ecosystem here, and he has a wealth of experience and knowledge. Our second speaker is Benjamin Quinlan. Ben runs his own consultancy called Quinlan and Associates. He is very well known for specializing his work and research in financial services and fintech. Ben is also the chairman of the FinTech Association of Hong Kong, which is, Ben, you can tell me this is true, and I think it's the largest or one of the largest FinTech associations in the world, both by membership and in terms of, say, followers on social media and so on. So we have an enormous ecosystem here of startups, financial institutions, consultants like Ben, and a range of other service providers. And DigFin is also a founding member of the FinTech Association. Finally, what I think no offense to King and Ben, but I think the most interesting presentation for many of you will be from Virginie van der Donckt. Virginie works for Velotrade, which is a startup fintech based here in Hong Kong. I'll leave it to her to explain the strategy. I've had the pleasure of meeting and interviewing the founders of that business, and they have a very compelling story. She's going to talk a little bit about her and her company's experiences in doing business here, getting set up, and so on. And I think so. There's going to be some real nuts and bolts, useful information for anyone who is in Belgium or elsewhere, who is thinking about either expanding to Hong Kong or finding a way to use this as a springboard to connect to the wider Asia Pacific region. So with that, let me introduce King Leung from InvestHK. King?
Okay, thank you so much, Jame. And again, a great pleasure to meet with all of you and share with you about the Hong Kong FinTech ecosystem opportunities presented by what we have in front of us, which is very exciting. Now, as the saying goes, a picture tells 1,000 words. I've prepared some slides, some visuals, so that it'll be hopefully easier for folks who are not familiar with the Hong Kong ecosystem to see what Hong Kong has to offer. Now, so perhaps, so Jame, can you see the slides? Looks good? Great.
Yes,
thank you.
Them.
Great. Now, so as a quick snapshot, basically, I think for those of you who have not been following the Hong Kong scene, actually Hong Kong has come a long way. Because I still remember a couple of years ago, it was something like 6-7 years ago, there was a survey in which Hong Kong ranked number 22 in the world in terms of a FinTech hub. But now we have really caught up. And recently, I think it was last year, we saw a survey done by an institution that both in mainland China collaborated with UK. And basically, Hong Kong was ranked number 7. So again, there are different rankings out there, but the short answer is Hong Kong has really come a long way. Now, at the moment, we have over 600 FinTech organizations, mostly are B2B. And as Jame rightfully pointed out, so 86% of them are, 66%, to my recollection, are actually engaging in B2B business activities. And the reason why, again, it goes without saying, being an international financial center, I mean, this is basically just playing to the strength of Hong Kong with very fertile soil. And in a recent survey done by the local regulator, Hong Kong Monetary Authority, middle part of last year, 86% of the banks are adopting some form and shape or form of FinTech solutions, which is very encouraging. Now, at the same time, from a B2C perspective, actually, Hong Kong is ranked based on the EY survey back in 2019, is among the top 5 advanced economy in terms of the B2C FinTech adoption. And the adoption rate, to my recollection, is 67%. Now, at the same time, the FinTechs in Hong Kong, as you can see from this slide, 46% of them have been around for more than 3 years. That's also very encouraging. That means that somehow they are able to do some great business in gaining traction locally. Now, I won't go into details of all these numbers. At the end of the day, it's fair to say by looking at these numbers, there are just a lot of financial institutions to sell to if you are a B2B FinTech. At the same time, the one thing that is almost like a best kept secret is that Hong Kong being an international financial center, there's another great thing that's going for us, and that is the transaction flow in and out of Hong Kong. So basically, when you are engaging in the business model that would somehow tie to processing a lot of payments, or transactions, cross-border, Hong Kong is a place for you. Now, again, the funding is also something high on the list based on the conversations with different stakeholders, including folks coming from Europe, for example. Now, the nice thing about the Hong Kong is that being at the IFC, we naturally have quite a lot of investors in Hong Kong. And based on a recent conversation that we had with the largest association in Hong Kong representing the private investors, it's called the HKVCA, the Hong Kong Venture Capital and Private Equity Association. Essentially, there are hundreds of members. Some are early stage VCs, some are later stage PEs, some family offices, and so forth. Now, among the few hundreds of investors, from what we were informed by the association, collectively, they're managing over $2 trillion of private capital. Okay, now, so to put in perspective, so for the new funds, right, since 2016, as you can see here, 98 billion of private capital deployed via Hong Kong, investing in different ventures. You know, on a per deal size basis, for growth capital, as you can see here, 129 million per deal. So again, we're not talking about, you know, small deal, $1 million here, 2 million there. We're talking about some substantial amounts, which is why oftentimes when folks from, say, Europe looking at expanding Asia, well, yeah, of course, I think there's some early stage companies with some subsidies here and there. But then if you really want to scale up your business to just move to the next stage with substantive scale, then Hong Kong is a place for you, because I think there's some serious money there to help you grow from, say, Series B, Series C onwards. Now, and also I think a lot of international media have been really following Hong Kong in terms of the really vibrant IPO markets that we are ranked #1 in 7 of the past 12 years, which is something that we are very proud of. Now, the other bit of it that is quite exciting is the whole GBA. Now, of course, I think you can look at the numbers in terms of population, you know, GDP. I mean, all these are huge numbers. But to put in perspective, just very recently, as a matter of fact, it was, I believe, yesterday, there was a news from Citibank in which Citibank announced that they're going to hire 1,700 more staff in Hong Kong to service the emerging GBA opportunity. Now, 1,700 staff from Citibank in Hong Kong just for the GBA opportunity, and this is enormous. So that's why we are seeing quite a lot of activities. The companies are gearing up for this massive opportunity. Now, this is a busy chart. My apology for that. Now, but at the end of the day, what we're trying to get across from this visual is that depending on which journey you're in, chances are there'll be some sort of Hong Kong government subsidy for you. Whether you are just coming in, setting up a company, or you are engaging with some sort of R&D in which you would like to localize your technology for the Asian markets, or you need to hire some people, the PhDs, masters, to help you do some developments. So on the hiring side, we also have some schemes to help subsidize some of those salaries. The business development talked about if you do need to go out to pitch to clients, we actually have different subsidies for the clients to adopt your solution in the form of, let's say, a POC, a proof of concept. Fundraising, again, if you really want to grow further, there are also some funds here that can help you just basically speed up that attraction. And last but not least, overseas expansion. At the bottom of this page, there are also some other subsidies that can help you to do marketing to other markets in Asia. Let's say you want to go to Indonesia, you want to go to GBA, or you're going to Thailand. We also have some funds to help you pay for some of those marketing investments. So again, I know this is a busy chart, but if you're interested to know more about this, feel free to drop me an email. You can find me very easily on LinkedIn. Now, again, I don't want to take things for granted. We thought that everybody on the planet know about this, but from talking to folks in Europe, we got friends there, we got some business associates. Actually, not as many people know of the great advantage that Hong Kong has from a tax standpoint, as we thought. So that's why I just thought it's useful to show this visual that is still very substantially competitive. We look at the aggregate tax that the organization will have to look at. So this is something that we feel that is important for you to be aware of. And these are the different segments that we've been focusing. Obviously, there are quite a number of them, and there are different stages from the payments, lending, which are kind of the wave one. So now we're on the wave two, insurtech, wealth tech, and so forth. And again, in the case studies that follow shortly, I'm going to touch on the two companies' stories to illustrate what I'm trying to get at. Now, if you are asking us, so what are the hot things, right? The hot areas that are really supported by the Hong Kong governments? And I have to say, this whole like open banking movements that you are all familiar with in Europe is also catching on in Hong Kong. And one of the initiatives announced by the chief executive of Jame, which is the de facto central bank and the banking regulator, at the FinTech Week last year in November, is this what we call the CDI, Commercial Data Interchange. Or in other words, it's a big data open banking initiative that's basically encouraging more organizations, both financial and non-financial, to use the data in a safe environment so that more data innovation, i.e. application of AI, risk management can be enabled. So this is something that has gained a lot of attention. So if you are a company that have been engaging in open banking, open API, big data kind of business in the financial services setting, this is a perfect time to come to Hong Kong. Now, another major push from the HMA is direct tech. And obviously, it goes without saying that, because, again, being IFC, we are very, very keen to make sure that the consumers are protected. At the same time, things will not go haywire while all this innovation are happening. So that's why RegTech is another piece which is going in parallel, where the regulator we really want to foster that we are going out of our way to invite the most, capable RegTech companies to come to Hong Kong to help enrich our local ecosystem. Now, to put in perspective, actually KPMG was commissioned to do a study last year by HMA. And in the study, KPMG found out that among the survey banks, only 1/3 of the survey banks are actually using at least one RegTech solution. 1/3. So that means 2/3 of the banks are not using any formal RegTech solutions. So that presents an enormous opportunity for RegTech companies as well. Now, I just want to quickly touch on two case studies. Now, one is Currency Fair from Ireland that you might have heard of. And then there's another one which is also in the swap payment remittance space that followed after this. Now, the reason why we picked Currency Fair and also the other company is that definitely, much like elsewhere in the world, payment remittance oftentimes is the wave one of FinTech. So for these folks who got the kind of like the first mover advantage that came in the past, say, 3-4 years, they're already reaping the dividends, in which I think they're able to get, obviously already got some paying clients, already established themselves as a major service provider. And at the same time, in the case of Currency Fair, because they already established themselves quite nicely in Hong Kong with a strong foothold, then they're using Hong Kong as a launchpad to look into entering the mainland China market in particular. And also, they're also looking at the Asian market. Now, so this is one example. And the other example is Stetris. It's founded by a French gentleman, also in the payment space. They have been growing quite nicely, in which they received a funding round of 5 million last year. But then the thing is that they were founded only in 2019. So the span of only, 2 years, they've grown very nicely to secure the funding. So you might ask, well, for something like payments, which sound like is something that is very competitive, very crowded. So how could they be so successful in such a short period of time? Now, I had to give credit to the founder of this company, because they were able to spot a very important, simple but important pain points in the market, and that is the difficulty for SMEs to open bank accounts. So obviously, there's always these AML movements around the world that make the banks being more cautious to open bank accounts for the companies. As a result, it's difficult. Now, but the thing is that all these companies, they have to pay the bills or accept payments from the clients. So basically, Cetrus and the same thing for Currency Fair, they fill this gap. So without a bank account, the SMEs can open a bank open account with Cetrus, for example. I think they have to pay something like 80 Hong Kong dollars, which is roughly what, €8 a month. That's it, right? And then with that accounts, then the SME is able to accept payments or pay the bills using the Cetrus payment engine. So again, it's simple, but it's a very painful pain point in the market that they address. So that's why they're able to gain traction so quickly. At the same time, they have been expanding. They've got a partnership with Wales Bank in UK. So again, so my point is that you don't have to be like a unicorn, like the Air Wallets of the world, to come into Hong Kong. So in the case of Air Wallets, which is another company from Australia, from Hong Kong, when they first came in, they were already a unicorn, like over a year ago. Now they're like a double unicorn. So in the recent funding round, they're now worth 2.5 billion US. Now, but the thing is that you don't have to be a unicorn to come into the Hong Kong market. There's just so many opportunities like what I just showed you in the case of Currency Fair and Cetrus that they're able to service. And as a result, they're also able to gain traction very, very quickly. Now, so the short answer about, so where do we start? It sounds great. Now, the good starting point is just come to talk to us at Invest Hong Kong. So we are, again, we are very friendly, we're a friendly team and helpful. And then the nice thing about the way that we are set up is that we are plugged in to all the major stakeholders in Hong Kong. So we are able to connect you the right resources, depending on what you need, from talking to potential clients, investors, the regulators, hiring, and so on. We have lots of offices around the world, including Brussels, headed up by our great friend and colleague, Paula. So feel free to come and talk to us either in Brussels or directly contacting us in Hong Kong. And with that, this is the contact information. So feel free to drop us a note, and we're here to support you and help you to succeed in your Asian expansion. So with that, I guess I would turn it over back to Jame. Thank you.
Great. Thanks for that, King. Before I head to Ben, because I'm conscious of time, but you must get this question all the time, is the obvious one, King. So what relative to our friends down in Singapore is probably like the one thing that you think that is that you just can get in Hong Kong that you can't get in Singapore or anywhere else?
Well, can I say two? Okay, now the obvious one is the fact that Hong Kong is part of GBA, right? Just physically. So that's why when the GBA is opened up, there's just enormous opportunity just is there for us to tap into. This is the obvious one. Now, the less obvious one is just the flow. Now, I think the one thing that just put in perspective, oftentimes when people talk about, oh, the Hong Kong stock market, yeah, it's great, IPOs and everything, but little would people notice. Actually, the trading liquidity of the Hong Kong stock market, the equity market, is 10 times the size of Singapore. 10 times. It's not even like twice or 3 times. It's 10 times. So if you are dealing with the FinTech business or financial services business, that would have to involve, transaction volume. Hands down, Hong Kong is just significantly larger. Even bond issuance, Hong Kong has 75% of the Asian bond issuance. 75%. So you're not even close, right? So Singapore is like 9% market share. Right. So I think these are kind of things that you can easily Google them, but it's just that those are kind of the sort of best kept secret that folks may not pay attention to.
All right, thanks, King. Ben, you spent a lot of time studying like a little more the nitty gritty of what's hot, what's going on right now. What are some of the hot stories in Hong Kong FinTech?
Sure. Thanks, James, and appreciate the overview by King. Always very comprehensive. Look, the fintech ecosystem here is rich along pretty much every dimension. So King was talking about payments. We're talking about blockchain. We're talking about digital banking, insurtech, wealth tech. You basically name it, and Hong Kong's got it covered. The reality is, as a smaller kind of captive ecosystem of 7.5 million people, as King mentioned, most of the emphasis is really around B2B. Now, there have been some, great inroads over the past year and a bit regarding new B2C platforms that have set up in Hong Kong, namely the 8 virtual banks. And correct me if I'm wrong, but it's 3-4 virtual insurers. Is that correct? I can't remember the specific number, but 4, there we go, 4 virtual insurers. So in an environment that is fundamentally overbanked, oversaturated, and so on, but for a long time, people would argue relatively underserved. Hong Kong has always been a very oligopolistic market, and there was a big lead-up process in the past few years by Hong Kong's monetary authority, which is our central bank, rolling out what I would call sequential development of the ecosystem. So fintech supervisory sandboxes, investigating DLT, exploring the whole idea of central bank digital currency here, and leveraging the efforts of the ECNY in China. King mentioned the open banking API initiative, so you could directly plug in as a third-party provider and start to leverage the data and information of the incumbent institutions to develop solutions that were really cool and cutting edge. And look, as a result of that, the ecosystem has matured in a very sensible and structured manner. For those of you who are thinking about Hong Kong, I couldn't agree more with King's points. This is an institutionalized market, very deep capital flows, very, very rich and strong asset management ecosystem, not just in terms of hedge funds, long onlys, but family offices. A lot of wealth here, not only to fund and build the fintechs, but to really drive the flow of where is the best activity going to lie. And the fact that Hong Kong is still that gateway to China, and it still is, there's no argument about it. Singapore will never serve that function. It just won't. So Hong Kong is basically that conduit between China and the rest of the world. And fintechs that are smart around positioning their B2B offerings with incumbents here, given that the infrastructure is developed in a way to support it, not only in terms of all the subsidies and everything that King mentioned, but the regulatory environment, as well as all the open data, the infrastructure, the API connectivity, it really sets a good precedent for going forward. Now, that doesn't mean Hong Kong is not without its challenges. This ecosystem is evolving. And as a result of it, you're seeing that you need to be a relatively mature fintech, or even if you're in earlier stage, you really need to carve out a proposition that the international financial institutions here will bite on. And you kind of bifurcate the ecosystem because you've got a lot of tier 1 global insurance companies, banks, asset managers, but then you have this local layer and then this regional layer of firms that Hong Kong oversees. But I always say, if you can succeed in Hong Kong from a regulatory standpoint, and you can get the tick of approval from the authorities here as to how to service the B2Bs, you can do it anywhere in the world. So this is why it's a great testing ground for any B2B solution in terms of its scalability offshore outside of this market. Treat this as a hub to learn, to get best practice, and then to spoke out in the right way when you scale. Wonderful place to do it.
Ben, banks and other large financial institutions have a reputation for being very slow to onboard fintech partners. Sometimes they take so long that the fintech runs out of money, and that opportunity is lost. In your work with both the fintechs and the financial institutions here, are you finding Hong Kong's scene getting a little more faster pace in terms of B2B adoption?
Yeah. So perennial pain point of B2Bs is how fast you get onboarded. Spot on by Jame. We work with a lot of B2B clients that are strung on these tiny little proof of concepts for months and months and months. 6 months, 12 months later, we hope to commercialize you. It's about smart decisions on who you do those POCs with. There are funding schemes here now to accelerate that, but COVID's changed the mindset. For those of you who are operating on this call in the B2B ecosystem that used to spar against the centralized innovation lab with foosball tables and cool posters hanging around, and you realize it's all really great, but there's no adoption happening. That is changing. And a lot of the financial institutions are realizing the marketing spend and all the glitz and glam and shine of innovation needs to actually happen. So as a result of that, many of these teams are being embedded within specific business units and functions. There is a commitment to roll these things out. The Hong Kong Monetary Authority just the other day said now for the 176 or 2, I can't remember, lenders in Hong Kong, you need to now report on your digital transformation efforts. No more marketing goo goo gaga, come up with the right metrics around what you're doing and how you're doing it. That just opens the floodgates for making sure that adoption moves quick, smart, and there's no more faffing around with looking the part but not doing the part.
Great. Before I turn to Virginie, just a quick reminder to the audience, if you'd like to ask a question to any of the panelists, just please put it in the chat function and we'll take a look at that. We're happy to answer anything that comes our way. Virginie, you work for a startup that has origins here. So tell us a little bit about Velotrade and please, what your experience has been.
Thanks, Jame. Hi, everyone. I will share my screen. I prepared a small presentation. So I work at Velotrade. I'm director of credits, and I will explain to you a bit what we are doing. So we created a platform, of course, fully digital, whereby we match, on the one hand, SMEs, being Asian exporters, small, medium-sized enterprises, having a real funding need, but not having access to local financial institutions. We match them together with institutional investors who have excess liquidity and who are willing to diversify their portfolio and invest in a different asset class. So we created an online marketplace, as you can call it. It's a marketplace whereby the seller can upload very quickly his invoices. So a typical seller, for example, will be an Asian manufacturer wanting to sell his products to a reputable buyer overseas. For example, this is a live case on our platform, an Asian manufacturing in furniture wanting to sell their products to home goods in US, but they cannot access liquidity. So they don't have access to banking facilities. So they come to Velotrade. We have a full team, a sales team, that is onboarding these clients. We're going to assess and evaluate how this client is doing, what is the relationship with the buyer, how long they have been established, etc. And then we look for suitable investors. So the investors on our platform, it can be, there are many types of investors. We have large funds, we have family offices, we have financial institutions, but we can also have private investors. So there's a really great mix, and there's also no minimum capital investment, etc. So the barriers to enter on the platform is very low. Also for the seller, he can just upload invoices to request for financing in a few clicks. Everything is on the mobile. So it's important to say that Velotrade itself are not funding those invoices. So we are really making the match between sellers in need of funding and investors who want to fund those invoices. Velotrade is doing everything around it. So we are making sure that the sellers who are onboarded on our platform are good sellers. They have an existing relationship with their buyers. They've been performing well. They've been having a track record where we can rely upon. We're vetting the transactions, of course. All the transactions that come into our platform are being established, that are being vetted. We need to make sure that there's no fraud involved, that there's no fake invoices, for example. So this is what our team is doing. Also, we are SFC regulated as one of the only platforms here in Asia. So we're quite proud of that, which means that, of course, we need to adhere to many rules. And for one, it's, for example, that all our sellers on the platform need to be KYC'd, so know your customer, before they can start trading on the platform. So we are providing all these services for our investors and our investors can just go into the marketplace, as you call it, and just see which invoices they like and what kind of invoices they want to fund. Velotrade was founded by three Italians, Gianluca, Vittorio, and Emanuele, and they have a very extensive background in finance. So I think it's important in the fintech scene, as it's quite new, that you have some credentials. So the fact that the management team has a very strong banking background, financial background, helps in order to establish confidence on both seller and investor sides. What are our achievements so far? So Velotrade was established in 2017. We established our tech hub in Vietnam fairly soon after, and we did our first monetized transaction as well in 2017. In 2018, we launched our mobile app. It went live, and we also participated in the Ping An Accelerator program, which we were a part of. And by the end of 2018, we were granted the SFC Type 1 license. It took us 20 months to achieve, so it was quite time consuming, but of course it was for us very important, again, for our credibility, to have to being regulated and to have this Type 1 license, as this will only show confidence to our seller and investor wanting to come to our platform. So in 2019 and 20, we focused on building partnerships. We built partnership with Malaysian banks, with MUFG Bank in Japan. And so we also did a partnership with Hashkey to incorporate blockchain technology, etc. And we also established new product modules. So we don't only have invoice discounting on our platform, we are also having e-commerce loans, we are having purchase order financing, etc. So for 2021, what are we looking for? We are looking for to further develop new product modules. We're looking at working capital facilities for our sellers, our SME sellers. We are looking to acquire the ESG label, so to be ESG certified, as this is also a hot topic right now that everyone wants to be involved with. And we also want to develop new markets. So at the moment, we are present in Hong Kong. This is our head office. We have a strong presence in Vietnam. And we also have a presence in Shenzhen, China, and in Taiwan. So at the moment, we're looking to expand maybe in Singapore, Indonesia, Malaysia, etc. Why was Velotrade established? Why did we set up the company? Because at the moment, there is a $1.5 trillion trade funding gap on the market, of which 45% are rejected cases from SMEs. So there's a huge potential in funding SMEs. The requirement is really there. People don't get access to traditional financing. We've seen with COVID that banks are tightening their restrictions. They are closing up. They only want to. They don't want to work with smaller sellers, etc. So we really see that SMEs are struggling to get decent access to liquidity. And on the other hand, you have investors who has huge liquidity at the moment. They don't know what to do. Sometimes we have the feeling that they don't know what to do with their money. And so they are able to fund invoices, for example, on the Velotrade platform, which really can be considered as an alternative for the money market funds, because they can invest on a very short term. The invoices can be 30 days, 60 days, 90 days, up to 120. Can be very short-term invoices, and the yields are very attractive. At the moment, we are speaking about 6 to 8.5, 9% per annum of yields for investor, which is actually very attractive. And they can diversify fully. We have some investors who have a couple of millions on our platform, and they are investing in $100,000 invoices. So their risk is well spread, well diversified between different debtors. So it's really a great. We're seeing that this is really appealing to the investors. Maybe why did the management choose Hong Kong to get established? I think first of all because it's really the gateway to China. Hong Kong is of course next door to China, but on the other hand, they are much more open. So we all know China has tight regulations, restrictions. The jurisdiction is not that open for foreign investors. As Hong Kong has a very robust legal framework, we are operating under common law, which is well known by everyone. Also, the international exposure of Hong Kong is, of course, very relevant. We can compare ourselves to New York and to London. And also, investors, they really love to have Asian-sourced risk. But, of course, they don't want to get involved. They still have directly to maybe China or less known jurisdictions because there are the cultural barriers. You have a lot of the language barriers, etc. So I think we are really trying to make being here in Hong Kong, we're really facilitating this Asian-sourced risk for them. Maybe one of the negatives, if you may want to know, of being in Hong Kong is that it's really a big boys' playground. So the cost of employment is ridiculously high here because, of course, everyone knows that the cost of living here is gigantic. We are one of the highest in the world. We have the highest cost of living in the world. So you're looking at high employment packages. Rents are also extremely high. However, this being said, the government is really trying to help startups here in Hong Kong. We are part of the Cyberport community, where we get actually subsidized rents. So this is really nothing to compare to the local market rate, let's say. And Cyberport is really trying to bring this whole FinTech hub together. So it's a really great way to network, to get introduction from Cyberport. And they also have accelerator and incubation programs for startups. They're really helping to get to know other people here. So yeah, we're quite happy to be established here in Cyberport.
Great, thank you so much. Virginie, that's a terrific wrap up of both the business. Do you have any more that you want to share with us, or do you want to go to some Q&A?
Yeah.
I mean, feel free if you're not finished yet. I didn't mean to cut you off.
Yeah, you can cut me off.
Okay. Okay. All right. Well, actually, we have a question from the audience for you. Some people are interested in understanding your business model, if you don't mind, Virginie. The question is. Could you share a little bit about default rates in your business model, and where is the risk when something like that happens?
Yes, thank you for that question. So I'm actually very proud to say that since inception, 2017, we are at 0 defaults on the platform. So, and this being after 1 year of COVID, where it was quite challenging for us also to operate. I think our credit measures are very robust. I personally also, we all have banking backgrounds, so we know what we're doing. We have a risk understanding, let's say. And so, yeah, so the default on our platform is at the moment non-existing, but this is because, of course, we incorporated risk mitigants, and we made sure that we onboarded the right type of sellers. We actually, when you see the volumes that we traded compared to the volumes we declined, we're actually at 50-50. So we declined 50% of the volumes that we traded so far because we thought they were not suitable for us. So we might maybe not have grown as fast as our competitors, but on the side, we really made sure that we are growing steadily and that our risk is under control.
Yeah, I think that goes back to Ben's point about you need a certain maturity to do business in Hong Kong for most business models, and I think that's a testament to the backgrounds of Vittorio, Gianluca, and the other people at the Velotrade team. They bring that that maturity and that understanding of how the markets actually work. There's another question for you, Virginie. I think this is coming from Belgium. Is there an opportunity for you, particularly because you and the founders are Europeans? Are you going to use Hong Kong as a way to sort of is this a springboard not just for Asia, but going back to Europe as well?
Yeah, might be. I think at the moment we are very much focused on Asia, as we truly believe that the market opportunity is really huge here. So at the moment, I think we further want to expand in Asia, and who knows, we are definitely looking into. We actually have one of our colleagues who is actually in Paris at the moment, looking also for assets over there. But the main focus remains at the moment on in Asia, because I think the market need is much higher here.
Right. Okay. Very good. Ben, you recently, Quinlan and Associates came out with a report very recently on virtual banks, and the headline that I got out of that was that you predict that these virtual banks could take up to, I think it was 19% of the banking revenue market share within a very short period of time. I think you said 5 years. And just to put that in context, if you look at digital banks or neobanks in the UK or continental Europe, where they've been around for 10 years, they're still sort of very basic product offerings, and some of them are viable, but not huge. Not huge market share. So if we take your analysis at face value, what is it, something about Hong Kong itself that is creating this opportunity, and what does that mean, you think, for the fintech landscape in general, if we can see the virtual banks here succeed at that scale?
Yep, good question. Look, that number, we kind of put that as revenue potential. And there's actually no reason why within 5 years they can't technically achieve that. The reality is, for those of you who are not aware of the Hong Kong banking market, the revenue pool is about 370 something billion Hong Kong. So think along the lines of just shy of 50 billion US, retail, commercial, and corporate banking. 50 billion US a year in revenues. Top 4 banks take about 60% of the market. There are 170 odd other banks which are so poorly digitalized, so poorly ready for the future, that take up the other 40%. Our view is they're under a lot of pressure to change. They won't be able to change fast enough. There are people who are open to using these solutions, because instead of going to a bank and putting your paper on the table to onboard, you take a selfie, you take a photo of your ID, and within 2 or 3 minutes, you've got a bank account set up. You've never seen that before. When I compare the product suite vis-a-vis the rest of the institutions here, most of the brick and mortar banks offer pretty basic stuff in Hong Kong. It's just the big 4 that really corner most of the market. So I do see appetite for these institutions to thrive. And the one difference from Europe is the neobanks have been in Europe for a long time, like the digital banks and so on. I remember when I was in Australia back in 2005, they had digital banks there, right? Online only banks. Same thing in Europe. So the proposition is fundamentally a little different. And the digital delivery of many of the incumbents is pretty poor, but it does not mean that it's just going to be a free ride for these VBs. It's not going to be easy at all. And right now it's a customer acquisition drive. You bring on a lot of customers, but you've got to pay for it. That's a cost. It's your cash and savings account, and whatever deposit rates you give to them, promotions, that burns through a lot of cash. So you need to fix your balance sheet pretty fast. Then you need to work out, well, we can't compete in the mortgage lending business and in razor thin NIMs. We're going to have to attack riskier lending segments in the personal space and in the SME space that aren't serviced by traditional financial institutions because they're hyper-conservative. And hopefully the access to data and all of the parent company credit scoring information and analytics capabilities back in China can be used to enrich that credit scoring process and make those decisions much faster without actually driving NPLs through the roof as well. So I do see an opportunity there. And, you know, the reality is I think people here, the COVID catalyst has meant that, you know, going to your bank branch and whatnot has been a bit more difficult. The final thing that I want to say is, for those of you who've been to Hong Kong, it's The reason why digital hasn't taken off here, e-commerce, this, that, banking, is because this place is so bloody small. You know, I could just walk outside of my apartment, of anything, and going to the bank wasn't like I get in a car and drive. You just go downstairs. So the whole ecosystem and infrastructure here is set up to be hyper convenient, but social distancing under COVID and the fears around that have meant there is a rewiring of the human brain, and not just with the young millennials and Gen Zs. This is across the board. When I know my mom knows how to use WhatsApp and Facebook, then I can understand when I'm no longer looking up her nostrils, she's getting more tech savvy, she understands how to come in with this generation. And I think the banks are prime position to capitalize on this going forward.
Yeah, that's great. King, I want to ask you one question as we're heading into the final stretch here. One thing that we hear about in other countries are centrally government-run, say, biometric or identity databases like MyInfo in Singapore, Aadhaar in India, and so on. You know, and you know, there still can be a little bit of pain when the onboarding process occurs in Hong Kong, particularly if we're dealing with anything cross-border. Can you give us a little sense of you know, some of the progress or what's on the agenda for the government to help continue to smooth out some of the rough edges?
Well, 3 quick points. First of all, Hong Kong also has our own digital ID project that was launched Q4 last year. Of course, I think it will take a bit of time to educate the market, and we are also part of that effort to try to help our government colleagues to make this to be something that's more ubiquitous. So that's on the sort of personal digital ID side. Now, of course, the corporate ID is also something that's coming down the pipeline. Now, so this is the first, I would say, building block. The second bit of it is that we naturally will have to figure out how to do like cross-border so-called data sharing or access of data, be it like calling up of the API to check a certain identity across the border on both sides. So that requires some sort of framework to test things out before the actual action taking place. So that's why I think in the recent, in fact, it was covered by the media within the past month or so. So the senior management from Jame also came out to talk about a few things that will be launched within this calendar year, 2021. And one of them is something that they really want to push for is the cross-border sandbox. So it's essentially sort of like a GBA sandbox. It's not just a Hong Kong sandbox, but it's a sandbox that is for the GBA. Now, this is something that the regulator would like to have in place so that you have a more safe environment to test out all these cross-border, like so-called data sharing kind of technical operations. So this is the second bit. Now the third bit is that obviously when we look at the technology and then also the regulations and whatnot, actually when we talk to some of the more savvy financial institutions such as Ping An, so Ping An is not just an insurance company; they also have an enormous technology arm, right? So the Ping An One Connect. Now these guys have spent like years pouring in literally like billions of dollars into developing all kinds of technological capabilities to enable all kinds of transactions, including cross-border transactions. So just from our talking to some of these more savvy players, the technology solutions is there, and also use cases of so-called sharing data, like a federative learning kind of arrangement, is already well proven in mainland China. Okay, so it's not like this is anything new. Now, the thing is that obviously from a regulator's perspective, they need to feel more comfortable in adopting this proven technology. So I think the third and last bit is basically just, I would say, the more manual process that the regulators on both sides have to figure out whether or not the existing infrastructure and the rules in place make them comfortable to just give a green light. But everything else is already here.
Great. Thank you for that roundup, King. That's fantastic, and glad to hear that so many more things are in the drawing board and will be being rolled out this year. We are out of time. I want to thank King Leung Virginie van der Donckt and Ben Quinlan for joining us here. I've learned a lot. I hope our friends in Belgium also learned a lot. And very importantly, of course, we also now have expanding restaurant pub chain called Friets. So if you're visiting from Belgium, you can get all your favorite treats here, no problem. So with that, I'm going to hand over to Hans de Backer, who is with the Belgium-Hong Kong Society. Hans, wrap it up, please.
Thank you so much, Jame. It was really nice to organize this FinTech webinar. Very enthusiastic speakers, enthusiastic moderator, of course. And indeed, I've learned a lot. Let me just wrap up what I've learned. First of all, I need to congratulate King. Hong Kong has become top 5 in the world in FinTech, which is amazing. And obviously, we all know that money is still flowing in Hong Kong like hell. So the deep funding sources available through InvestHK are there. There is the support of the HKMA, even because I was also in banking in Hong Kong before. I hear big data open banking, which is quite amazing. Hong Kong being 10 times the size of Singapore in terms of stock exchange. No surprise there, but congratulations on all this. Then turning to Ben, obviously there is a lot happening in B2B, but it's great to see that things are moving towards the B2C space. 3 virtual banks, 4 insurers, 4 virtual insurers, exploring digital currency, exploring digital idea. Family office coming to Hong Kong, obviously InvestHK helping on that. So there is really a lot happening there. And as you called it, Ben, this is a great testing ground to learn and scale. And traditional banks, which really are traditional in Hong Kong, they're really being pushed to open up digital transformation, big data, open banking, what have you. Obviously, congrats also to Virginie and Velotrade. It's not an easy business to do invoice discounting and e-commerce loans, but you really are helping SMEs to get access to liquidity. And on the other hand, you give a great yield to investors, it seems to me, from 6% to 9% without any default or a zero default, as you described it. This is really more than a money market fund to invest in. So I hear from you that there is actually more investment available than loans being granted, which again shows how rich Hong Kong is and money is really flowing in Hong Kong. So I should basically stop here and say Hong Kong is doing well. We are really great. We're really happy to hear this. So in case the participants want to know more, either invest in Hong Kong, obviously trade with Hong Kong, or just join us as a member, they should come to us. We can bring you in touch with Invest Hong Kong on one side, Hong Kong TDC on the other side. And why just don't join us as a member? Because we are a fun group through the Belgium-Hong Kong Society. With this, thank you all for participating today. And we have a sunny day here in Belgium. We have a sunny day over in Hong Kong, which basically brings good news for the future. Thank you very much.